So hello guys, welcome back to another session of pre-market analysis, and this is going to be the analysis for 23 January and Thursday. Okay, this is Thursday and still we can anticipate some movement to happen, right? Okay, let me just go on daily time frame to see what has happened and what can anticipate in this week. Okay, now let's hide our drawings so that we don't get biased. Now, as we can see, the price has been trading in some kind of fair value gap. Okay, so between this point, you guys can see the price is just trying to let me place it here. So we have rejected from this particular fair value gap, so might be the position is that we can go down, right? And there are like this high and this high, so two equal highs are found, but yet not lot of liquidity will be there, because it is like just like a sweep, and it is also just like a sweep, not a proper candle formation. So a sweep in here and a sweep in there, so it formed a equal high. So I have less confirmation of the price to just take it as a high type of liquidity. Got it. Now let's go on and let me unhide my drawings. So here we have the drawings probability of these are the anticipations for the yesterday thing. Okay, now you guys can see the price has created some kind of fair value gap in here, right? Okay, so there's a fair value gap which I'll highlight, but let me go on a 4-hour time frame to see is there anything we can hide more. Okay, so yes, this is the thing. I can actually take out this thing. Okay, and this is the fair value gap, and here we are. So this was a high price swing. Okay, and you guys can see, let me just see. Okay, this did here, and it came back to the 50% equilibrium. Fine. Now again the price went higher. Again, let's see if it came back to, yes, it is now at the equilibrium point. It is trying to, I guess, take out this particular low. Okay, so this is the 4-hour time frame. Let's go on a smaller time frame. If we go on a smaller time frame, we can see some kind of retail stuff that is forming. So you guys can see this, some retail kind of stuff is forming. So why am I trying to highlight this retail stuff? Okay, so because people will see, okay, this is the market, it is trying to just go higher and higher. Let me just put it here. Yeah, now people will see this thing and they will see, okay, some kind of market, and now something is broken out. If it goes above, it will just break down. Okay, this is what the anticipation for the day will be. Okay, now they have built one buy stop and buy stop. If you consider this particular buy stop, these buy stops, okay, these higher low, higher highs, okay, these are taken out, and if you see, it has been taken out properly well, right? If you see this particular swing from this point to this point, it is how much? It is nearly 20 pips, and that is what is recommended by the ICT, that after some high, some 20 pip rally will be there, and that is what happened actually. Got it? So this has happened, it's fine. Got it? Now let's go on smaller time frames. Now we are anticipating, you guys can see this particular sell side liquidity is taken, and then this sell side liquidity is also swept. It's swept, and not I'll just call it sell side liquidity, sell side sweep, not liquidity has which has been taken. So again this got swept, so it's also got swept. Okay, now the things are swept, so I'll not keep my eye on this thing. So let's just keep it gray. Fine, let's keep it gray. Okay, so these levels have been set and I don't care about them, so let's delete them. Okay, so this particular high is not swept that much. You guys can see this particular price can reverse. There's a fair value gap in here, and there's a bigger time frame fair value gap. Okay, so this is lower time frame fair value gap at this point, and there's a bigger time frame fair value gap as well. Now what we could anticipate, let's try to understand on a 1 hour time frame. What is this thing? This is, I guess, I don't think this is useful. Let's delete it. Okay, let's not try to get a lot of jargons in our price action. And if we see according to 1 hour time frame, this is the fair value gap. Okay, the price jumped from this fair value gap. Okay, and it created a fair value gap again while jumping higher. So here we go. This session will be a little longer. Maybe it can go 20 minutes or 15 minutes. Okay, now so the price is going lower and lower again, and it's the start of the London session, right? Nearly 12:30 the London session has started, and during the London session it has broken those higher points. Now if we see, the price is rallying downwards, right? Since night it has been rallying downward. It took out this sell side liquidity, this sell side liquidity. Let me just delete this thing. Okay, no need. This one also not needed. Okay, now the sell side liquidity has been swept, and finally we have the sell side over here at this point. Got it? Now here it is. Now people will see this as a breakdown, but I don't think we should see it as a breakdown, because next level of liquidity, which is just exactly downwards at this point. Okay, let me delete this as empty. There's a change in the structure of delivery. We can anticipate somewhere over here at this point, because this has been properly respected by the bodies of this candle. Okay, the change in the structure of liquidity. Got it. So it has been sweeping this low. Well, let it be. Now let's go on small time frame. There's a fair value gap that has been created. The price could come back into this fair value gap. Okay, there's a chance that the price could come back to this point. Now from this high to this high, this is the 0.5% equilibrium level swept, then again got higher, then again it is wanting to go lower. It means it is trying to see, you guys can see there's a 62% retracement level that has been swept. Okay, it is trying to give us some kind of optimal trade entry pattern. Got it? No, somewhere in the where we have our indicators, where did we get it? Okay, so we have the indicators over here. So this particular yellow line below this point, you can see this is London kill zone. Okay, so the London kill zone, sell side liquidity has been swept on the London kill zone. Fine. So when the London market started, it went out higher. So this is a buy side liquidity that has been created, and this is a fair value gap that has been created while the price was wanting to go down. Okay, now so let it be this particular thing. You guys can see this is a fair value gap. Okay, so this is a fair value gap. The price went back into that fair value gap and it broke lower. Now, so this is a fair value gap. The price came into that fair value gap and it broke down exactly. Okay. Now, if the price is back into that fair value gap, what can we anticipate more about this thing? Think about this thing. So there's a buy side liquidity that has been here, and because this particular fair value gap is there, the chances is that the price, because it has not touched the fair value gap, so the chances is that the price could come back to that point again. Got it? Now it is trying to sweep the liquidity below this point, just like it did over here. You guys can see that the liquidity has been swept. If you go on 1 hour time frame, might be we can see this thing. Okay, the type of structure you can see on this 1 hour time frame, it is trying to sweep the liquidity and then it goes up. Same way over here we can see something, it is trying to sweep the liquidity below the bodies of this thing. Okay, and also the wicks have been taken out, so I'll anticipate some kind of higher move to be there. Okay, so somewhere like this could happen. I'll first, okay, now these are equal highs. You guys can see this equal highs, so I'll just form a buy side entry. Sorry, buy side liquidity is there. Okay, so properly the candles are now proper finally. So those people who have entered as a sell model, they are in profit right now. So the market will take their stop losses over this high or maybe over this high. So price could come back to these buy side levels. Okay, let me just place my stop buy side levels over here. So let me call it buy side liquidity. Okay, and again we have it buy side liquidity. So we have the buy side liquidity. So yes, I am wanting the price to take out this buy side liquidity. I don't know if the price will take out that exactly high, because not much liquidity has been generated there. Okay, I want more and more liquidity to be generated, but at least if the price will run back to that point, okay, at least I'll expect the price to do rally like this. So here we have the retracement from this point to this point. If you go according to the displacement, at least it should go above this point. You guys can see this is the 0.5% equilibrium level. Okay, let me delete this thing, unnecessary. So it goes exactly to that point. So this is the thing, we should just keep the point at this level. Sorry, yeah, now at this level I should call it an equilibrium point. Okay, if this is the bottom, then this is the equilibrium point. These are the buy side liquidities. the price has fallen down. Even if it wants to continue moving down, it should go up for the equilibrium thing. Okay, the price should come back to the equilibrium. That is for sure. It should do it. Okay, and while doing so, it can take out this buy sell liquidity, this buy sell liquidity, and also this buy sell liquidity, as you guys can see, right? This is fine, right? Okay, because the only analysis I'm going to do is in the New York session. Okay, so here we have buy sell liquidities, buy sell liquidities, buy sell liquidities. Because the sell side liquidities are now swept, we do not care about it that much. Okay, sell side liquid sweep is there. Let me save this sell side sweep. Okay, if the price wants to go down, right? See, this particular levels are taken by this thing, so the price rallied higher. I don't think now, because these rallies, this is a rally downward. Now let's see if this rally downward is according to equilibrium price swing or not. So here we are. Now the price is below, you can see there's one sweep below the equilibrium, then again at the equilibrium. So now the price is exactly taking that thing. It is not sweeping, it is taking that particular price. Okay, so it's fine for me. Now the price wants to go put back to the equilibrium of this particular price level. Okay, this is what we anticipate. So this is the equilibrium level, and I want the price to reach back to that point. Okay, at least like this. It should show me some kind of market structure that should be formed. Okay, some kind of market structure shift should be there. Okay, that is it for the EURUSD. Let's go on to analyze for the GBPUSD as well. Now let's analyze for GBPUSD. See, we want the price to go higher, but we can see for GBPUSD some other kind of structure is being formed. Okay, some jargons like this. It is falling downwards. It broke out, but then again it went back. Got it? So it manipulated retailers. Let's go on a 1 hour time frame to see the whole type of structure, what is forming and what is not. Okay, I was expecting some kind of placement in this zone, because this is 69, 62 and 79% retracement from this high to this high. Okay, so if you see this high to this high, this 69, 62 to 79% retracement level is there. That is why I marked that point. Now the price, I wanted the price to come back to that point and take me out, but yeah, didn't do so. Let's go on maybe 15-minute time frame, but let's see what is actually happening. Okay, for a moment, just take a moment. I'll say price went back higher, then it again went back lower. If the price wants to take this particular low, now I don't see any kind of low in here, but yeah, I can see some kind of fair value gap. Okay, so because we can see this particular fair value gap is created, inverted, so the price should bounce back from this fair value gap. Okay, plus one more thing, if the price doesn't bounce back from this fair value gap, I want the price to bounce back from this level. Got it? This is a level where I want the price to bounce back. Okay, now anything else we could do? Okay, we can see one kind of inverted fair value gap as well in here. Okay, on 1 hour time frame we can see a whole fair value gap that has been inverted. Price came back to the fair value gap and then again broke down. Got it? So this is inverted fair value gap, right? Let's see what we can anticipate in this thing. Sell side level is continuously being taken, right? You guys can see sell side level is continuously being taken. Okay, so we can see a breakout, breakout, I'll say, not breakout, I'll see some kind of, what you call it, buy sell liquidity sweep. Okay, so 15-minute time frame. So this is a buy sell liquidity sweep. First of all, buy sell liquidities, so I'll just mark it like this. Again, buy sell liquidity sweep. It swept out this low, and again it swept out all the lows. And if you want to go for other buy sell liquidity, it is like exactly up over here. Okay, so I don't think the price would come back to that point. Okay, fine, we can see some kind of reversal point in here for the price to come back to that point and just reject off again. But let's see, is it forming any fair value gap in the 1 hour time frame at the recent levels? So we are quite unclear about this. I think it is retesting, not retesting, I'll say the price needs to come back to the equilibrium before a price movement higher, right? So this is a 0.5% equilibrium, and I think the price is rejected from that point to go higher, right? Okay, and also there is a change in the structure of liquidity there, and also equilibrium point is also there, right? So let me consider it as change in the structure of liquidity. and also equilibrium point is there. Okay, now because this is change in structural liquidity and also equilibrium point is there, we can expect the price to rally higher to take out those buy stops. Okay, so I want something like this, you know, this is what I want actually. Got it? So these are the analysis for EURUSD and GBPUSD for the day, and let's go on quickly have a look on the USD index chart. Okay, and the price is rallying higher. Okay, I want it to, because it has reached at this point. Okay, so let's see what it's trying to do. Okay, it has not taken this stop, it means it is trying to build the liquidity, so it will go higher or not. Think about this. It can broke lower about it can broke lower or not. We don't have much confirmation to the price in right now over at this point. Okay, but if you go according to same, it is right now at 0.5% equilibrium, so it can go and take out these sell stops as well. So there are good chances, but let's see. Okay, what happens. And that is it for the day, guys. Take care, see ya, bye bye, have a nice day. I predict the moment these can be the general moments, and we'll see in the post market analysis video has the moment actually happened or not. Okay, then that is it for the day, guys. Take care, see ya, bye bye, have a nice day. Although it is acting as a bottom order block, so the price can stay below this point, so we can only anticipate these buy sell liquidity to be taken. Got it? That is what I anticipate. That is it for the day, guys. Take care, see ya, bye bye. Keep backtesting, keep learning, and keep trading. Bye.